What's going on, guys? Gabe with ReviewDork. First time visiting this channel, smash the subscribe button, hit the like button, turn on notifications, and yeah, I'll include a video down in the description. You guys want to learn how you can win a car? AMC's got to hit 1,000 a share. I know we got some naysayers, but I'm a believer. I got high conviction. I'm giving away one of 3 cars: BMW X6, a Corvette C8, or a Ram 1500. If you haven't seen that video, I'll include that link down in the description, and I will announce the winner on crayons.com. Make sure you guys register for that. It's a FUD-free zone with no bots, and we're all about just positivity and just comforting each other, because sometimes apes just really have a stressful day. So let's go ahead and look at the chart here, guys, because AMC is on the rise. And yeah, at 54.50 currently, we can see some consolidation. We saw a high of 55.22. And guys, we're going to talk about AMC and its historical data. I'm going to make you a believer of the squeeze, but I'm also going to show you data that you've never really been shown before. Okay, it's really going to, I guess, appease your anxiety. Let's go ahead and look at the 4-hour chart, because this is what really matters. And we see that upward trend line and AMC fighting to get into the upper half of the $50 channel. What I would like to see AMC do this week is break $63. There's something about $63 that is both psychological and technical. I feel like once we break 63 and consolidate, meaning we spend some time there, ideally an hour or so, and then we make a move upward, I really feel we can catch 70. And I'm really hoping that happens this week. But let's go ahead and do the obligatory Vortex data here, guys, because, well, we see current short interest is 14.24%. You hedgies, you're doubling down. You're doubling down. Cost to borrow is 3.96%, and the short interest change is 1.81%. So I try not to obsess over this data, because AMC as a stock, let's go ahead and take away all of this short interest, the squeeze, all of that. The stock on its own merit is doing absolutely phenomenal. And I'm going to show you guys, based on empirical data. I actually went ahead and extracted data from the NASDAQ, and we had historical data, because just like in TA, we tend to use past performance to predict future performance. Well, you can look at empirical data and just really see how AMC is performing. Let's talk about the 002 rule, because that goes into effect tomorrow. All right, so we got the supplemental liquidity deposit. Previously, hedge funds self-reported on a monthly basis. Now they're going to do it on a daily basis. This is equivalent to a stretch of highway adding 30 more state troopers. I'm going to break the law. I'm going to break the law regardless, right? And some will argue that you don't break the law until you actually get caught. Will this increase the frequency of these hedge funds getting caught? Ideally. Now, what does that mean for AMC price action? We don't know. Would it also mean that hedgies may have prepared themselves for this and will change the way they're presenting information? Quite possibly, just like when we use radar detectors or radar jammers, but we get caught. That ticket is just extra juicy after that point. Let's go ahead and look at Excel data here, guys. So I'm an Excel guy. To me, numbers don't lie. I try to stay away from the hype, even though, you know, I'm human. I get hyped up sometimes, right? But numbers don't lie. So what I did was I took the open and close of AMC, and I took this data going all the way back to January 5th. So this is the first day that I began compiling data. With this data, we could see intraday price change. You'll see a lot more reds than greens. In fact, guys, when you just look at intraday price action, you will find that you have 70 days red versus 42 days green at or about. That's pretty wild, actually. 44 days green. And you're like, wait, we're losing. But no. What I actually did was I compiled the gap up and gap down data. And with this gap up and gap down data, we're able to see true gains and losses. So for example, the intraday price change on 6/21 was $5.65 to the negative. but there was a gap up while you were sleeping. That gap up was $2.08, which means that your realized loss was $3.57. And guys, we can do this all day, but when we adjust for the gap ups and we account the true gain and losses, we have 60 days green versus 54 days red, and the average uptick on a green day is $2.05 versus the average downtick on a red day being $1.43. Now, if you guys would like for me to make this Excel sheet public, read one of the comments in the comment section. I'll pin it and I'll include a link to this data here. What this is effectively saying is that AMC on its own merit, without the hype of a short squeeze, a gamma squeeze, it is performing resiliently. Also, food for thought, the hedgies are cheating and we're still winning. You guys got to look at this data. We are still winning and all we are doing is buying and holding. If this does not give you conviction in the stock and conviction in AMC as a long-term play, guys, I don't know what will. The hedgies, with the 002 rule, guys, the hedgies are forced to level the playing field. They're forced to be far more transparent. And even over the past couple of months, they haven't been. They've been cheating and we're still winning. You know, I hate to say it. Sorry, you Patriots fans, but you know, you hedgies took a page out of Bill Belichick's playbook. Stop cheating. You'll still lose. This is Gabe. I'm signing out. Peace.